So we see yet another example of a small gust of wind making huge waves. Even the sensation that interest rates are going to continue higher is hurting the markets. Market breadth is looking horrible. Stocks are relying on record stimulus, record buybacks, and record quantitative easing. Can this really go on forever? You came here for the truth, so let me unveil that for you. Today we're going to look at the stock market. First, I want to begin with the US, then I want to go overseas. I want to also take a look at a few articles at the end. Let's begin by taking a look at the S&P 500. It has dropped below its 50-day moving average. I like to cover this even though it's something that I don't particularly trust as being the indicator that we're going to encounter some sort of crash. I just look at this because this is what the technical traders do. This is what the algorithms are trading on. Okay, so it dropped below that. I think that for the technicals, this is significant to watch. It has to be able to be pushed back up. So the plunge protection team will probably come in next week and make sure that they buy up this dip. So I will definitely keep an eye on it. FANG stocks obviously leading that because with this market breadth being so horrible at this time, you could see the importance of FANG stocks here, and this shows us that they have dropped. You see the stock market drop as well. So the FANG stocks clearly are ahead of the game. They've been the best performers throughout 2018, and I've been saying that you just need to look at what the central banks are buying to determine which stocks will be the best performers, and that has been true ever since. All right, so we can see that on the short term anyway, that this has not been doing so well. So I'll keep covering that as well. The VIX index here is something that I like to laugh at whenever I need a good laugh. It's kind of a funny thing. Some people like to watch sitcoms. Other people like to watch their Netflix shows and things. I like looking at the VIX. Okay, for me that's funny. I know I have a weird sense of humor, but here we have a little bit, just a little touch, a little dash. All right, a sprinkle of reality came into play, and the VIX actually spiked up to 17 and change today, but don't worry, it came back down under 15. Okay, so we don't have to get worried too much. We saw during this time period, if I can see right here, that it got to about 29 at its peak, and that there shows us how this really isn't where it should be. Okay, today we're seeing it at a very low rate of under 15. It should be a lot higher. There's tensions going on with China right now. We have a worry that this thing could really escalate to a very dangerous territory. All right, I don't even want to say the words, but the trade tensions could be, let's call it something much worse. All right, I'll stop there. That's it. Let me move on. Now, this is the different sectors of the U.S. markets breaking this down, and I think it's interesting to look at it in this way. It doesn't break it down far enough, I think, but I think it's really good to just look at it, take it for what it is, and then you can understand which sectors are really performing at this time, if any, okay? But in this case here, right at the top of the list is tech. This is consumer discretionary being, for example, Amazon. These ones have performed very well. I mean, the FANG stocks, obviously. Then you have the health sector, and this is where a lot of the money is being spent. By the way, if you look at what has been going on with the GDP numbers, if you look at what has happened with expenditures, consumer spending, a lot of that is actually on healthcare. It's not as if it's something that everybody's lining up for the new iPhone and that's the reason why, or people are buying new cars, people are buying this and that. They are for sure, but the GDP has been expanding at this rate here because of not just because of that, but this is a significant portion of the healthcare costs. Ever since, in fact, they introduced Obamacare, that started a really big uptick in the trend of how much it took up of the GDP. I noted that here in a video I had done previously. And then we go down the list. Energy, oil prices here have been coming up quite a bit throughout this year, and that has been quite significant. That has been boosting certain towns, oil towns, with the fracking and everything else that's surrounding that. But also just in general, the oil market seems to be doing quite well this year, and it was really subdued for quite some time. And then we go down below that, and you could see financials barely trying to make it above water this year, but going down further to things like consumer staples and so on don't quite make the cut. All right, now the U.S. trade balance is quite terrible. I mean, ever since the financial crisis where it peaked out, you see for a brief moment it's at a rate that I think was probably, a lot too high to begin with. But anyway, regardless, it's just a constant and never-ending slide that we can see, and that connects in with this, the U.S.-China trade balance. And ultimately, year after year after year, this just gets worse and worse and worse. All right, this number continues to increase as we see the tensions continue to increase as well. All right. This is the sea of red, unbelievably, in fact. But we're looking at this, and it's all different markets. Euro markets, North America is on here, and Asia Pacific. Even when you look at this, you can see the very, very minor positives. I think that could easily change in either direction. Okay, so when we look at all of these, this is just one day. All right, this is actually from, I think this is from yesterday's trading day, but regardless, I just wanted to show you this and just to see how all markets really trade together. And that's really what it comes down to. You might have, for example, on here, Mexico. All right, so you have Mexico. They have their own issues. They have their own internal things that are going on. They have their own internal economy. Then you have, let's just say, the US, okay? So they have their own internal issues. Yes, they have geopolitical issues. They have geographical issues. They have things happening, okay? But the stock markets tend to trade together. When they're scared of one thing happening, they say, uh-oh, now I have to drop mine. And then, it's, to me, it's silly to see it, but that's the way the algorithms work, and that's the new way the stock market is. The MSCI Asia Pacific Index has been suffering all throughout this year, and I've been showing you the progress on that, and it just continues to decline on average. Okay, it goes up and down certainly, but that is the average. This is an interesting chart. Trade headwinds. Asia stocks have taken the brunt of US-China tariff conflicts this year. Looking at that, when we see the only one that has been moving up in the positive territory, that is obviously the S&P 500 index, led by the FANG stocks. Thank you, and thank you. So that's the FANG stocks right there. And you can see the blue is the Hang Seng. And what else we got here? The black is the MSCI Asia Pacific. And that shows us, by the way, the worst performer here is the Shanghai Composite. The last time I checked, it was down 25%. I think it's moved up a little bit since then, but it's still below 20% as far as I'm aware. That is a bear market still throughout 2018. I think it's very significant. We need to keep our eyes on it. I'm going to move on quickly. JPMorgan Chase is laying off about 400 employees in its consumer home lending business as parts of the market slow down. And that right there shows us, 400 employees for a really big company. It's not that significant, but that's still 400 jobs. JPMorgan is not the only one doing it. So now we have the retail stores, the Sears, the Kmarts, the JCPenney's, the Macy's, all of these are closing down. They're just constantly getting rid of people, constantly closing stores. Then the surrounding stores are suffering as a result, the malls and everything. But you also have it in the financial industry here, JP Morgan. We are seeing the introduction of robo-advisors. That's going to have a major, major impact on the financial industry. This is still new, but there are many companies that have introduced it at this time. It's still small, still new, but definitely all of the entry-level individuals will just be unnecessary because people can do it from their app. People can do it from their computers. They just log in. They input the simple data that individual, your so-called financial planner is going to be taking care of you with. You input that data, and that's it. It puts you in the right things that they give you the confidence that they're managing it and so on. So that's that. There's not much else I wanted to mention with that. And just right here, this is my opinion. So first of all, I'll tell you the era of bank secrecy ends as Swiss start sharing account data. We already saw some of this taking place back during the financial crisis. They said, we want to know who's keeping money hidden. And so Switzerland started giving out anything that was requested from it. Now they're just automatically just sharing it. Okay, so that's what's happening. Automatic sharing. I think this is truly, it's sad actually, because this is the type of thing that, to me, when we have taxation is immoral. Taxation on an individual's income should be something that should be illegal for a government to ever do this. A lot of people, I've talked to many people, in fact, I probably would say at least 75% of people, not necessarily on this channel, but the average public, they would just say, I don't mind being taxed. I don't like to, pay for this or that, or I wish it was like this, I wish it was like that. But you know what? I don't mind paying tax. And unfortunately, this is the rule, this is the laws that they set in place. You're forced to pay the taxes. As far as I'm concerned, I think that we should not be paying taxes. It's just immoral. It is extortion. It is theft on so many different levels. There's a whole nother issue of how we would end up paying for everything. As far as I'm concerned, it wouldn't surprise me to see the statistics, but I would think at the very least, I'm being conservative, 90% of it goes on to drop things from 30,000 feet up in the air on countries you've never been to, you never heard of, and you couldn't point out on a map. All right, that's the general public for you. That's the end of this video. A little rant. I'll end it there. I'm a little frustrated. Anyway, if you found the video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. I do appreciate that very much. I just want to say very quickly that, I got a lot of support on the video. It was probably 2 or 3 videos ago. I asked, what you like about this channel. I heard so much positivity from you guys, and I'm truly appreciative of all of that. I made a comment on the last video I did, but I just wanted to really extend my thank you to you, and so you can hear it from my voice. I'll end it there. If you want the financial education you were not taught in schools, these 2 books have it all. You can check them out at the link in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.